Hey, what's up, you guys? It's your boy Sander. How are you guys doing? Let me know how you're doing in the chat. I'm doing fine. Thanks for asking. I see you asked, Michael. So, first of all, disclaimer: this is not financial advice. This is for your education purpose only, so you can build a framework around your trading. Be small, be humble, focus on the long term, and do not risk money you cannot afford to lose. That's the most important thing. Again, if you can hear me, drop something in the chat. If you can see my screen, drop something in the chat as well. I'll appreciate it. Other than that, we're just gonna jump into the fundamentals first of all, because it's Monday. We're gonna go over the economic calendar. So let me bring that up. All right, all check. Great, thanks Brent, thanks guys. So yeah, the economic calendar, we're gonna start at Monday. There's a lot going on this week, so it's gonna be a very busy week. Again, all economic data points will have some sensitivity to it, so they will have a lot of weight, they will have a lot of importance basically linked to them because of the situation we are in concerning central banks, concerning recession fears, etc. All right. Alright, so I'm gonna go over these documents as well, which give you more of a background, more of a context, what's fundamental environment we are in right now. But first of all, let's go through these data points and see what they are telling us. So I think the most important one again is the United States dollar, what they are saying right now. So let's start with the Eurozone. Retail sales are dropping. No, they're not dropping. Why are they red? Year over year, month over month. They are red, but they are not dropping. So that's weird. Right. Basically, it's not that good. Maybe it's red because it's not good, but it should be in green. Anyway, we have retail sales still going up, so that means that people are still spending. Oh, it's negative. Oh, excuse me, guys. It's negative 8.8, so that means that people are not spending in the Eurozone, in Germany in this case, which counts for the biggest part of the Eurozone. They are not spending at all, and it's worsening, and it's worsening. We can see that previous one was -8, or no, excuse me, previous one was 1.1, still positive. They expected it to go to drop to -8. Now it's at -8.8 year over year, so that's bad. Previous month was 1.2. They expected it to drop, but still to stay in positive territory. It is still also dropping, and it's even in -1.6. So that's bad for the Eurozone. Not good at all, especially for Germany. That's very bad. If you guys have the cracking sound, let me know. It's my window that's open again, so let me know. Other than that, these euro, here we have manufacturing PMI below 50, which is very bad as well. So yeah, we can see it's green, it's rising. Previous one was 94.2. They expected it to stay the same. It rose by 0.1, which is practically nothing. And everything below 50 is a contractionary environment, which is not good as well, again, for Germany. So the Eurozone is doing very bad. A very big part of that, or a reason because of that is, or a reason that this is happening is, of course, the situation in Russia, cutting us off from gas for a lot of gas at least. So that's the biggest worry in the case of the Eurozone. Again, inflation is a problem as well. Now they are hiking interest rates, but the environment is not good. We can see that on these numbers, right? These numbers are telling us that growth is slowing down, but still they are hiking interest rates, which is like not good at all. Exactly, Michael. Not good at all is the only word we can say. It's basically dramatically bad. So then we had an unemployment rate, which is staying the same, but still pretty high, 6.6. So that's bad. Okay. Again, what is a recession? Just to give you guys an explanation, a very brief explanation about the recession. A recession is when a country, for example, the Eurozone or the United States, has a contractionary GDP growth or negative GDP growth for 2 consecutive quarters behind each other. That's consecutive, right? So when you have one quarter in negative growth and the next quarter also negative growth, then technically you are in a recession. Okay, what goes hand in hand with a recession? It's unemployment rate, right? The unemployment is rising, so less people are getting jobs, and that's why on Friday, but we'll get to that, NFP is going to be so important, because we have negative growth. We have all these bad data points showing us that we are going into recession, or that we basically are in a recession since last week, technically, officially. So if we are seeing on Friday that then NFP is also rising, so more people are getting unemployed, then that's not a good sign. And then that confirms us that we are going into a recession. Okay. ISM Manufacturing PMI, that was today. So let's start here. Global Manufacturing PMI. So PMI numbers are growth numbers, guys. Again, dropping, not good. We have construction spending also falling. ISM Manufacturing Employment Index below 50, right? That's bad. ISM Manufacturing new orders also below 50, even worsening. They expected it to go above 52 or above 50, which was expansionary. It's still contractionary. That's not good. ISM Manufacturing PMI here, again, it dropped from last time, not by a big margin, but still it dropped. It wasn't as bad as they expected it. That's why it's green. But if you compare it to last number, it's still worse than previous number, right? ISM Manufacturing prices paid 60, but it fell a lot. Okay, but this one is not that important. And then we have the auctions. I'm gonna do a session probably on Wednesday about bonds and bond yields and how the currency is affected by that. I have this PowerPoint from I think last time when I still did artists, right? I'm gonna go through that next time, and I need to fix the layout. I was gonna do this today, but I need to fix the layout. So that's for next time. And then here tomorrow, so this is gonna be very important, guys, especially if you are using the EA, if you are using the trading robot, then be very careful with trading gold or trading the Australian dollar. Probably you guys aren't trading the Australian dollar, but Australia is affecting gold. So we have the RBA interest rate decision, the Reserve Bank of Australia interest rate decision. Again, this is the most important meeting for the Australian bank. They are expected to rise their interest rate or raise their interest rate for 0.50%, so 50 basis points. That's positive. We can see that as a positive. Of course, we need to check how much is already in the price. But I'm expecting this could push the Australian dollar up a little bit. But it will certainly give volatility to gold. So it might be wise to start trading gold like an hour after the RBA interest rate decision and statement, right? Like 5:30, something like that, Belgian time. That would be wise to start trading. Or maybe from, let's say, 12 to 4 and then stop trading and start trading again after that. That's your decision. I'm going to start after the interest rate decision probably, but that's your choice to make. Before we have the interest rate decision, we have building permits and home loans. I doubt it that this is going to affect the market, because the market will just be waiting for this big number or this big decision to come out. And then we have GBP, excuse me, not that important. RBA commodity, not that important either. What's the next big thing? Red Book might give some volatility. Global Manufacturing PMI for the Canadian dollar, if you're trading CAD, can give you volatility as well. And then here, Fed Evans, the speech of Fed Evans and the JOLTS, the openings. So this is basically very important, and it's a front runner of NFP. So NFP will show you how many people are unemployed, how many people are employed. Some of them will be part-time employed, some of them will be full-time employed. So that gives you a very detailed and very hard number, right? But the JOLTS is also very important. What is JOLTS? It shows you how many job offers are on the market, how many job vacancies are open. And if this number is dropping, and it's expected to drop, it shows you that businesses are hiring less people. And when are they hiring less people? When a country goes into recession. Okay, so keep an eye on that. If this is lower as expected, then NFP will probably show you guys that the unemployment in the US is also rising. Other than that, Fed Bullard speaking. So again, the Fed speakers will probably give a lot of volatility to the market, to the United States dollar, and to risk assets like US 30 as well. So be very careful when these guys are talking. That's always in the New York session, of course. Employment change, labor cost, participation rate, and employment rate. So again, this is all about the labor market. So right now, labor numbers are very important, maybe more important than inflation numbers. It's a cycle, guys. Whenever you are in the business cycle, at a certain point, inflation is more important, then growth becomes more important, then the labor market becomes more important, right? So they have different periods when they are more or less important. And right now, labor market is becoming more important because it's confirming that it's confirming those recession fears, basically. Okay, so we can see that these numbers are going to be very important. Again, it's not loading until Wednesday. I always have this week. Wow, GMT is not even right here. So let me fix that as well. All right, so Wednesday. Wow, Fed Bullard speaking at midnight. That's crazy. So be careful, guys. Again, be very careful. Oh wait, it's changed because I changed my time zone, right? So again, that's very weird that Fed Bullard is speaking, but he's a hawk, right? Bullard is a hawk, so that shouldn't be too bad for the dollar. Unemployment and participation, we had this. Export and import trade balance won't affect the market by a lot. Again, PMI numbers could move the euro, but I don't think it will move the euro that much. Here, this one will move the market, right? Global composite PMI, very important. Again, this number won't be very strong. I don't see a lot of upside or expect a lot of upside for the euro. Retail sales, this one is important as well, right? Maybe a little bit more important than the German number, but again, it probably won't push the euro higher, and I don't think it will. I don't think the euro will do a lot because I'm not expecting a very strong dollar right now, and basically the euro. How should I say it? We have seen a weak dollar, right? And we haven't seen a strong euro because of that. Usually, when the dollar falls, the euro takes advantage of that and it strengthens. Right now, that's not the case. So that's also showing us that the euro is weakening or not having buying powers. PPI again, right now that's less important. The period where it was important is a little bit gone right now. Of course, it still holds some weight to it, but not as much as the labor market is having right now. And then again, in the New York session on Wednesday, we have global composite PMI. These numbers, guys, ISM services, ISM manufacturing. No, that's not now, right? It's all about services. So again, these numbers will be market movers. Don't have a doubt about that. So again, if you're trading and if you're in a good trade, then stay in it. If you're trading the EA or trading with the EA, get the hell out of the market and shut down that EA, right? The oil market has seen some recovery, more output, but still not enough output. So we need to check oil in a second after the fundamental part, of course. Then Thursday, August 4th, import trade balance. So that's going to be important as well for the Australian dollar. We know that this is an importing or exporting country. Sorry, it's an exporting country. So the trade balance will be important. it's dropping, so that's not a good sign, of course. If we see an improvement in trade balance, if it's higher than previous number, then that will be a very positive sign for the Australian dollar. But we'll have to see. Again, with recession fears, less products are being sold, so less products are needed to be manufactured, right? And so less commodities are needed. Okay, so that's why probably it will fall. And again, then on Thursday, this is going to be the event of the week, the Bank of England monetary policy report, the interest rate decision. So this is going to be the event for Thursday, very, very important, but probably it won't strengthen the pound, right? They will probably raise their interest rate again by 50 basis points, just like the ECB did, but it won't stimulate the dollar, the pound, excuse me, a lot. I don't think so. And we have a document about that as well. I feel like we're always having like an hour is not enough, so maybe I'll extend it a little bit. Continuing jobless claims, so that's the labor market again, will be important. Initial jobless claims, so that's all like an indicator, a pre-indicator for Friday NFP. So this will be this will give us some guidance of what we can expect on Friday. Export and import, so trade balance as well here for the Canadian dollar. Again, that's important. It's an exporting country. Natural gas, and then we have a Fed speaker as well. So yeah, these New York sessions will be very volatile this week, and then on Friday that won't be any different. Leading up to the leading up to the non-farm payrolls and the average hourly earnings, it will be a pretty calm Friday until the New York session starts, of course. So yeah, this will probably be a very good day to trade with the EA, although it's on Friday right now. And again, when we have very, very, very important data, and this is data that the market is waiting for, we have a very calm and slow market until we have that data point coming out. So again, when you're trading with the EA, this can come in really, really handy. So yeah, I think until New York session, maybe I even push my risk a little bit higher, right? Because I know this is going to be a slow market from London session until New York open. Unemployment rate, so we have unemployment or employment numbers for the United States dollar, but also for the Canadian dollar. Usually they come together, so this is also going to be very interesting. USD CAD could see very big moves, especially if USD is worse and the Canadian dollar is better, then you'll probably see USD CAD moving very hard to the downside. Okay, of course, if they are both strong numbers or both weak numbers, then we'll just see some consolidation. Yeah, that's it. It's gonna be a very, very busy week. It's gonna be packed and full of data points. So check your economic calendar every day. I might post a reminder in the Discord because yeah, it's easy to forget. Other than that, we have the FX Daily Technical versus Real document. We have this one about yields. Maybe I'm gonna go over it. It's not a lot. And then we have this document which I'm gonna share right now in the fundamentals chat in Discord because we won't have the time to go over that right now. Let me see. I'm just gonna paste it in here. I'm just gonna copy the link so you guys can read this and you know what to expect on Thursday when the Bank of England has their meeting, right? They show you 4 possible outcomes. This is the ING base case, so that's probably what's gonna happen. So yeah, very interesting, definitely worth the read. It's only 2 minutes and you've read it and you are a lot smarter when you've done that. So again, guys, I haven't been watching the charts a lot. So reading this gives me that push, that knowledge to know, all right, I know what's going on into the markets. Without reading this, without having some kind of fundamental background, some fundamental knowledge, I just don't know what to do. All right, I can watch the market, I can watch the charts, and I can see, oh, this is trending to the upside, and I can try to find a buy opportunity when there's a pullback. But knowing this is, again, I always tell you guys this is the fundamental wind in your back. So if you know this, then you just put your technical analysis on top of this, and it gives you much more confidence when you are taking a buy or a sell trade. Okay, so the FX daily document, technical versus real. After evidence that the US is in a technical recession, so 2 consecutive negative quarters of growth, that's technically a recession. Expect assets sensitivity to data to be even more pronounced. This week, the key release of the non-farm payrolls, we do not expect that this data we do not expect this data to flash red warning signals on a real recession, leaving the prospect of a 50 basis point hike in September alive. We suspect more dollar weakness will be selective. So again, if I pop up the chart here for the United States dollar, I think it was last week that I showed you guys, or when I drew this yellow or orange box, what I feel is that throughout the entire summer, we're gonna stay inside this box, inside this consolidation. Is it possible that we're gonna drop a little bit lower? Of course it's possible, but I think we will get back into that zone pretty soon. Okay, so that's what I'm expecting. I think 105, and that's also what ING is telling us, 105 psychological level should not break. It's possible that it's gonna hold and then stay inside that range. So that's what I'm expecting. So let's continue. So it's hard to get bored in these markets these days. I think you guys can agree. Usually July and August are very slow, very easy to trade. Not a lot is happening, but this year it's way different. Okay, central banks are always at play. There's a lot going on. Sentiment is very volatile as well. So yeah, there's a lot going on. July was a very eventful and volatile month for global markets, and we doubt that we'll navigate much calmer waters in August. The switch to fully data-dependent approach by the Federal Reserve and the European Central Bank means that incoming data releases will have magnified impact on most asset classes, and there are still geopolitical and virus-related threats that can have a major impact for global outlook and should keep uncertainty elevated. So again, when the uncertainty is elevated, safe havens usually stay quite strong, and risky assets like US 30 are seeing some downside, right? Of course, there is improved risk. We've seen that with the Federal Reserve still hiking interest rates, but not that much. The market has seen this as a positive, right? If they would stay that aggressive with hiking their interest rate, the market was probably still going down, right? By the market, I mean US 30 and basically all equities. So we've seen a recovery in that because of a less hawkish, a less aggressive hike. But don't underestimate, there is still a lot of uncertainty in the market. After the rather grim Q2 GDP numbers in the US market last week, markets are actively seeking evidence of how much this technical recession is real. The main gauge to watch this is the unemployment rate, as a fully fledged recession needs to see weakening of the labor market. Friday's US non-farm payrolls will therefore be the main highlight of the week. I hope everybody gets that. If there is a recession, then businesses will fire people and unemployment will show that. If businesses are firing people, then people have less money to spend. If they have less money to spend, then they will stop buying stuff. If they stop buying stuff, then those businesses will earn less money, so they will need to fire people, right? Because they cannot pay their employees. And the circle goes down and down and down, okay? These people get fired, they stop earning money, they stop spending, more businesses fire people, and that's what a full recession is, okay? No people are spending, people are getting fired, and businesses are going basically out of business, okay? Some focus will also be on activity surveys, starting with today's ISM Manufacturing Index, which was negative, which we expect to fall to 51.5. Consensus was 52 from 53 last month. We've seen that has fell. I can't remember how much anymore. Let's check. ISM Manufacturing 52.8, right? So they were pretty close, I think. Not that close, basically. Once again, this should all but endorse the narrative of a slowing U.S. economy, which should warrant a slower but not a stop to the Fed tightening in autumn. So that's still a long way down the road. So it's confirming that growth is slowing down, but it's not telling them or not telling the Fed or telling us that the Fed will just stop hiking, right? The tightening cycle is still going on, but less aggressive. And less aggressive is already seen as a positive. So you can imagine what a loosening policy or a stop. If the Federal Reserve would say we're going to stop hiking interest rates, we're going to take a break, we're going to pause with hiking interest rates, the market will definitely see that as a strong positive. And even one step further, if they say the market is going down too much, we're going to have to cut interest rates again and start stimulating the economy again. That's when you will see equities going up super aggressively. Even cryptos will go up, right? So that's going to be the time to start buying again. On the FX side, the repricing in lower rate expectations sent equities higher and generated the perfect environment to unwind some of the quite extensive dollar longs last week. Our view for the coming days is that we'll not see the dollar entering a broad-based downtrend, and we could instead see only some selective strength in the G10 against the greenback. And maybe those strong currencies will be the Canadian dollar, like they are saying here, because oil is still pretty strong. Same for the Norwegian crown. They also are an oil exporter, so they could see some strength, right? For example, the recent rebound in oil prices may keep the likes of the Norwegian crown and the Canadian dollar supported, while low yield and the repricing lower in rate expectations help USD JPY to 130. We've seen that USD JPY is starting to go pretty aggressive to the downside. That could continue again with market uncertainty and especially the US 10-year yields falling. So that's for next lesson, next live stream, right, about the US 10-year yield. But we know that the Japanese yen is inverted with the US 10-year yield, and if basically if the 10-year yield is falling, then the yen is increasing. So that's why USD JPY is falling. And when is the 10-year yield falling? Is when people go to safe havens and buy bonds. If bonds go up, the 10-year yield, so the yield of those bonds, are going down. Okay, so and then the dollar goes down and the Japanese yen goes up. I hope you can follow. Sorry if I'm going too fast. I'll explain more in detail next session. We suspect European currencies like the euro and the Swedish krona, they may struggle to find sustained support given the European gas troubles and the worsening outlook. The pound is facing the risk of a dovish repricing after the Bank of England meeting, while the Australian dollar may receive some support, although external factors should still dominate, as the Reserve Bank of Australia may hike 50 basis points tonight. In our view, the dollar should be able to hold above 105 by the end of the week, although volatility is set to remain quite elevated. So I think reading that or listening to that gives you more and a better understanding of what is happening in the market and why these currencies are moving, right? What is driving these currencies? Well, now you partially know. A little bit about the euro. Given the lingering uncertainty around the Russian gas story, we think euro USD may remain close to 102, at least for this week. Incidentally, there are no major data releases to watch in the Eurozone over the coming days, nor any scheduled ECB speakers. So that one should stay pretty quiet. Then GDP, Bank of England hike may not be enough to lift the pound. Expect a bit of a wait-and-see approach in the pound. Price action heading into Thursday's Bank of England rate announcement. A look at rate expectations show that the market is now fully pricing in a 50 basis point. All right, it's fully priced in. Okay, though that's important to know, which is also our base case scenario. So if the 50 basis point is already fully priced in, then the market won't move to the upside or look at it as a bullish surprise outcome, because it's already in the price. Now, if a 75 basis point would be the case, then we would see the pound moving up, but that's not going to happen, right? Their economy is not strong enough to do a 75 basis point move. If we see a 25 basis point move, then just go sell the pound, right? Again, not financial advice, but I'm going to sell the pound if I'm going to see a 25 basis point move, okay? Because then they're going to have to reprice that, and it's going to be a dovish repricing, which is going to happen anyway down the line, but probably not now. Still, we see a non-negligible risk of some pushback against the market hawkish repricing, which could trigger some weakness in the pound. I hope that's clear for everyone. If not, let me know. If you have any questions about this, just let me know, right? And then about, I'm still doubting if I should talk about this. You know what? I'm just gonna drop this in the. I'm gonna drop this in the Discord as well, so you guys can read this if you want to. I'm not gonna go over it right now. It might be too confusing at this point in time. Maybe not everybody will understand. So from next week on, you guys should be able to understand. All right, like that. That was the right group. Yeah, it was. And then we had this, so you guys have this as well. So I think it's time to go. I'm just gonna take one more quick look to the events of tomorrow. So we have the AUD coming up, the interest rate decision coming up. So we might be able to see some bullish setups. Would be interesting. Other than that, jolts tomorrow, which could push the dollar a little bit lower, maybe a little bit through that 105, but it's probably not gonna close much lower. So yeah, that's it. So let's see. All right, the dollar. So dollar, what are you doing? We've seen push down, breaking this low, right? So this was having some bearish divergence very clearly. So let me draw that. Okay, you can see the RSI was showing us that buyers were leaving the market. Then we have this low getting broken by that move, retested. It got retested again over here. Not fully, but okay. It went down into the sell zone, another sell. Target, okay, pullback. We haven't seen a pullback in the sell zone, so that could still happen. It could go all the way maybe to 104,500, but I don't see it go much lower, and then it's probably gonna snap back into that yellow-orange zone. That's what I'm expecting for the dollar. Let's see. One I wanted to check was the USD JPY. So yeah, I think I marked that one up last week as well. So again, we were in a slightly, we were in an uptrend, right? If you isolate it like that, it looks like a slight uptrend. But when you're looking at the big picture, this was a strong uptrend. This was a time when US 10-year yields were increasing as well. So an increased US 10-year yield means dollar up, USD JPY, or at least JPY down. So let's take a look at the US 10-year yields to give you guys an idea. This was US 10-year yields, and now it's falling, right? It's falling because of the bond market. If TLT, that's a combined bond market, like you have US 30. If this is going up, and we can see it is going up, then US 10-year yields are going down. So we can see that this is going down. So that's the reason why USD JPY is falling. So again, we had the same thing. We had this uptrend. This was our last high. We had to pull back. This was basically the last buy that we had, but we didn't knew that at the time. So you could still or you could have bought this with a lot of confidence. You had probably a lot of reasons to buy if you had that 50 EMA as, where's that 50 EMA? It's probably here, right? Again, you have that 50 EMA, you have that role reversal level, you have that buy zone. So you have a lot of things that and that psychological half level as well. You have a lot of reasons to buy here. It went up. Hopefully you had a break even by then, probably you had, but then it failed to break this high, and that was already an alarm, a red flag. When you saw this going down and then breaking that low after this this high wasn't broken, that's a red flag, and that shows you that it's probably going to start a new downtrend. So it went to the target zone, or it came very close to that target zone. It made its pullback, a very nice pullback. That's the type of price action that we want to see. Very retractive, okay? Not an impulsive move, but a very corrective move into that sell zone. Again, touching that role reversal, which was broken here, right? That low was broken here, and then it turned into a resistance. So we can make it red, of course. And then here we had that sell zone, that pivot sell zone, combined with that 50 EMA, which is being retested on the other side. So here it was acting as dynamic support, and now it was broken and acting as dynamic resistance. So we have the same confirmations, but for the downside, downside, wow, downside, as we had here to the upside, right? So here it was a bullish setup. Now it's turning into a sell. A bearish setup. Then we had this big black candle, an engulfing candle, okay, and basically that was our sign, and our basically the market screaming to us, hey, I'm gonna start this new downtrend, okay, and it did. It started a very strong impulsive move. That move happened. It went to the target zone, even beyond. It made a very fast pullback. Can we count that as a pullback in the sell zone? I don't think so. I think we are still up for a retracement into that sell zone. At least I'm going to wait for it. So what I would say, we have this low, which hasn't been retested. I think it's too far away. Looking at how aggressive the market is, it's probably not going to retest this zone. Then we had another zone right over here, which has been retested, but I'm expecting this to return, right? Also, that 50 EMA is too far away from price right now, so it needs to snap back, right? It's too stretched. It needs to snap back, and probably it's going to be something like this, right? This is going to start flattening out, okay? Once this starts to pull back, this will flatten. So I'm expecting this, and then here we can look for that sell to that target zone. So I don't expect this to go to the target zone right away. It is possible, of course, but this is more what I'm expecting, and then we can try to look for bearish divergence, try to look for a sell opportunity inside our sell zone, right? So again, then we have some confluence. Let's see if we stretch this all the way here. Again, this is also looking like a strong level. We had some price action here as well. So this is looking like a pretty strong level, psych level 134.5, something like that. So that's also good. We have 134, which could act as a psych level as well. So somewhere in here we need to see and go to like a 15-minute time frame and see if we have some price action that we need to see, some price action that we like, right? A little bit like what we saw on gold today. So if we go to gold on, I think it's on a 5-minute time frame. So let's see. Let me rewind this. I think I marked that up somewhere when we were somewhere like over here. So let me see if this is on a 5-minute time frame. If you see this type of price action happening on USD JPY in that sell zone, that's what you need, right? You have again a double top. So I marked this up, this double top. It didn't broke this previous high, then it broke this low, right? It broke that zone to the downside. It created a new lower low, and it made a pullback a little bit higher, right? But as long as it doesn't break these two highs here, as long as it doesn't break that resistance, we are good. Okay, so and by breaking I mean really breaking, like going above, closing higher. Okay, if it makes a spike, which could happen because I'm not the only one looking at this trade setup. A lot of guys are probably thinking, oh, I'm gonna take that sell, I'm gonna sell again, like I did. Okay, I did the exact same thing. We can still expect a spike to get all traders out and then move lower. I was open to take that risk, and it's working out pretty well. So yeah, and then it created this new lower high. Okay, it's created a new lower high which we were waiting for. It doesn't have to be right here, right at that retest of that role reversal level, but it's okay how it is. So then we can just let it play and see what happens. So we went down, we tested one more time, and now we are over here. So we are still good. We are still looking for that sell. It's not going as fast as I expected it to go, but still we already went to a, what's that? Let's see, we already went to a 1 to 2.5 risk reward, which is not bad, all right? So yeah, we can continue with that. Other than that, on the bigger time frame, let's take a look at gold on the bigger time frame. Even on a daily time frame, we can see that we are in a place where we can look for sells. So let me remove everything. So we are trending to the downside. To be honest, I expect gold to move higher because the market is more going into recession style or recession mode, if I can say it like that. We do have technically showing us that the market is still bearish, but I'm slightly more getting bullish on the fundamental side. We can see that we have a low here. We can connect this low. I'm just going to do it like that, and then we can move it like this, right? Then we have clean channel, which touched here, it touched here, it touched here and here. So on both sides we have two touches, which is cool for me. The third touch is usually the strongest to go down. So this is going to be a very important point to see what gold is going to do. Are we going to break, retest and go higher, or are we going to take a sell right over here? Technically, I would tell you guys just sell it. Okay, we have our pivot. We are at the beginning of the month around that M3 level, which is good for sellers. We have a role reversal level here, which is probably going to act as resistance, right? We have that 50 EMA very close as well, which also could act as resistance, dynamic resistance. We have the third touch of our channel, the upper band of the channel. So technically, it's probably going to go down. We are in overbought area here as well on the RSI. That's another sign that we can probably go lower again. But on the fundamental side, that's not in line for me. On the fundamental side, it's more telling me, hey, probably gold is gonna increase in strength, is gonna get stronger. So I would wait a little bit to make my decision on gold. Of course, I like to hear your guys' view. We are already starting to see bearish divergence on the 1 hour time frame. I don't know about the 4 hour time frame. Yeah, we can start seeing some bearish divergence here as well, meaning that buyers are leaving the market, but we could still see a spike to this zone before we could see a sharp decline again. It's very confusing right now, but again, technically everything is telling us we are going to go down. Fundamentally, that's not the case right now. So yeah, be very careful when you're trading gold. I know you guys, or some of you guys, are looking at gold, so be very careful. Same thing with US 30, for example. I have this buy, I shared this buy with you guys. Again, based on fundamentals, this looks more possible. We just need that pullback in our buy zone, and that's going to be the setup that I'm looking for. That 50 EMA is where it needs to be. It just needs to flatten out a little bit, and if we get that retracement, it will start to flatten out, and that will be a good price to start buying from. I wouldn't buy from the pivot. There is too much room to fall down, too much imbalance to fill. So I'm going to take the M2, the bottom of the green zone, to start buying. But other than that, fundamentals are good. Sentiment is recovering. So we need to keep an eye on the data points and the Fed speakers as well. All right, the Fed speakers will be super important. So watch that Forex Live website as well. So go here and just scroll through it and see what the Fed speakers are saying. Usually there is an overview about, oh, Bullard said this, Powell said this, etc., etc. Okay. Oil takes a dive with WTI falling 5. So let's take a look at oil here. So how is the oil market developing? So we are still going down. So that trade worked out super nice. So we can delete it. I'm gonna delete this zone as well, although it's holding right now. The oil market is going sideways. I've seen that there is gonna be more oil output, so that's bad for prices, but at the same time I've already read as well that it's not gonna be enough. So that's probably why it's consolidating right now. So be very careful when you're trading oil. Any other requests of you guys? Do you guys want me to go over certain pairs, any particular pairs? I'm gonna go to Euro USD as well. So let's take a look on the daily time frame. So that's what we want, guys. I think all pairs need some time to basically to finish their retracements. I feel like this is still gonna go a little bit higher, maybe to 103, 104, something in that area, touching that 50 EMA, consolidating, transition a little bit, and then go down again. That's what I feel like what's gonna happen. So yeah, for now it's all in a downtrend. There's probably even a channel that we can draw if I can mark up my right. So this is touching very nicely here, very nicely here, here, here. So let's see, we can bring it up to the highest high. So again, this is again gonna be in a very nice confluence zone right over here. So be very careful. I think that's the theme of today. Be very careful. I'm saying this for every pair. Again, it's all very dependent on the data. But I still think the dollar is gonna be stronger than the euro. The dollar is already pretty low. So I think this could develop pretty nicely to the downside. We're just gonna have to be very patient. This is probably gonna break to the upside for now. Again, this is today's target zone. We're probably not gonna reach it today, but we could reach it. Oh, this is this week, so we could reach it this week. Today's target zone is here, but again, it's very choppy. They are both very weak right now, so that's why we are getting more of a sideways moving market. The pound against the dollar, now seeing some upsides. That hawkish interest rate is getting priced in, but now it's probably gonna be priced in completely. We are at previous month's pivot. We are very close to this month's M3 level, which is usually the high of the month in a downtrend. So that's where we are. We are seeing some bullish divergence here, but I'm not gonna consider that too much. And again, if the pound is gonna come out with an interest rate decision of 50 basis points, we're gonna see some downside. So then we could scale down to a lower time frame, maybe a 1 hour time frame. And you need to see some impulsive move to the downside and then a correction, and then that's where you want to start selling. But for now, not a lot of setups, so I'm sorry guys. Is there a setup for Euro USD? So yeah, we went over that one. There's not really a setup for that one. Where is it? Here it is. Sorry guys. So again, I think we need to go higher. I think we need to wait a little bit. I wouldn't try to buy this because it's not the right time. Maybe on a 5-minute time frame, yeah, I wouldn't do it. So just wait and see. I think the complete market will be in a wait and see approach this week. So yeah, I think it's going to be a volatile week. So we could see spikes to these zones where we are waiting for. So maybe a limit or so could be appropriate. But again, I like my market executions. You guys know that. Let's take a look at Bitcoin. So again, just looking at this, it tells me, hey, I'm gonna make another leg to the downside. Okay, impulse, correction, impulse, correction. What's the next obvious thing? A next impulse to the downside. Of course, we know that the market is is recovering. We know that sentiment is recovering, but I think it's too early. And again, if we get that NFP number and it's showing us that we have a worsening labor market in the United States, this will go down again, right? We are in previous weeks or previous month's sell zone around that pivot. This month's M3 level, this is going to be the high of the month. We're not going to go higher. So a short on Bitcoin is probably not the worst idea. Psychological level 2500 or 25,000, excuse me, is right over here. We could spike to that. We are having bearish divergence. Okay, so the bulls are getting out. We can see that right over here. We are in overbought area. Everything is setting up for a sell here. So yeah, another push to the downside, another push to maybe 15K, something like that is very, very possible. What's this? This is 16K. We could definitely reach 16K by the end of the month. So yeah, don't think we can't go any lower. 4 hour time frame. We're not seeing bearish divergence here. So yeah, just wait and be very careful when you're buying crypto in overall or in general. Other than that, guys, maybe we could scan some pound pairs. Pound AUD probably gonna go down tonight. This month's pivot is right over here. We could touch it and go down. We are still in a downtrend. Usually when you see this type of price action, a very strong impulse and then a consolidation, this is a continuation pattern. Okay, we have that strong impulse. We have that consolidation right over here. We had solid support here, resistance, and then we had a solid support here. Probably this is gonna go down. Okay, so yeah, that's what I'm expecting. That's what price action at least is telling me. So let's see on a 1 hour time frame, we are moving higher, but we are also seeing bearish divergence. So bulls are getting scared. Again, the pound is probably gonna have to reprice. Is going to see some weakness. AUD could see some strengthening. So GBP AUD could go down based on their interest rate decisions both this week. GBP CAD, same thing. There is a lot of bounce strength right now, but I think it's going to turn pretty fast. Right, so don't be fooled by 1 day's strength. Then again, GBP CHF, still waiting on that break. It's not happening. Maybe this week. GJ, so the Japanese yen is probably gonna be one of the strongest pairs this week. So consider that if you're trading. What happened over there? Let's see. We wanted to break that. It broke. We had bearish divergence. It went down, not enough. Went back up, and now it's chopping down. Yeah, maybe we could see a sell tomorrow. Let's see, 4 hour time frame. Yeah, we are in that target zone. We need a retracement, so that's not the best thing to do. I'm just gonna leave it with that, guys, because this trade worked out. I'm gonna leave it with that. The market is really choppy. The market is gonna wait for these interest rate decisions. There is a lot of data to come out, so it's very difficult to give you guys some clean setups. So I don't want to put you guys on the wrong foot. I just can let you guys know what I'm thinking. Again, this is silver. Wow, what a move to the upside. Again, this is screaming for retracement. This was a target zone, guys. So if you see the target zone is here and price is already more than double that move, you just know that it's in need for a retracement, right? And where's the obvious retracement is gonna be? It's gonna be the pivot. Okay, maybe that psych level, right? So mark that up, wait for it to fall, and then look for that buy again. Yeah, that's it. I'm gonna leave it with that. Thanks for watching, guys. Thanks for joining. Did you went over AUD JPY? Sorry, was a little too late. No, I haven't. So I can finish and wrap up the call with that one. AUD JPY. So again, be very careful with AUD pairs tonight. We're gonna have that interest rate decision. We are at target zone on the 4-hour time frame. Probably will need some kind of a pullback. A strong AUD is possible tonight, giving us that pullback. Will it be short-lived? That's possible, and then we can go down because we probably gonna see a stronger JPY. So any move to this zone is very possible. That's this week. Yeah, I'm a pretty big fan of that sell setup. We're having that the same pattern, but on a bigger time frame this time. We were in an uptrend. It failed to create a higher high right over here, so this was a double top. We had our previous low here. The previous low got broken by this move. At first it doubted a little bit, but then it said, "Oh, I'm gonna break it anyway." It went down. Target zone still pretty near that target zone, so a pullback to this role reversal level, to that pivot, to that 50 EMA is still very possible and would be appropriate to then make its next move to the downside. We are also around oversold area, so we really need that pullback. I don't know, on the 1-hour time frame, maybe yeah, we need to wait. On the 1-hour time frame, it doesn't look like it wants to go here, but if I'm selling this, it's gonna be somewhere over here and not sooner. So yeah, thanks for watching, guys. I appreciate it. You know that. Don't forget to like the stream. It helps me out a lot, and thanks for doing that. If you're not subscribed yet, then definitely go do that. The link to the Discord is in the description below. So again, thanks for joining, and we'll see each other next session on Wednesday. Oh, I forgot something about the option expiries. Anyway, that's for next time. Or maybe I drop something in the Discord. Ciao, guys. Thanks for watching and have a good evening. Ciao, ciao. Take me away. Take me away. Take me away.